Hey traders, I'm James, one of the content team leaders here at A1 Trading, and as we start today's stream, I wanted to let you know about one of our show's main sponsors, FX2 Funding. With all the craziness going on in the prop firm space, we're excited to share some of the solutions FX2 Funding has put together for their traders. First, FX2 is rolling out DXTrade, which is a web-based trading platform that provides traders a smooth trading experience. It also looks super cool too.
But that's not all. By signing up with FX2, you get access to C-Trade. C-Trade is a trading terminal where you can create custom indicators or download ones from the community. Get access to all of this and more by signing up for FX2.
So, for traders looking to get funded, you can get 15% off by using promo code A1Trading15. That's A1Trading15. The link and promo code can also be found in the description. Now, onto the show.
All right. Good morning, guys. Welcome back to another live stream. Hope you're all doing well. We got 120 people here as we just started up the stream. So good to see you all this morning, this afternoon, wherever you are in the world. What's up, Life, Men Koba. We got Jet V or JTV, maybe. 5K driving. Good to see everybody. Thanks for being here with me. We should be live on YouTube. We should be live on Twitter, and we are live on Facebook as well. You know, Facebook, I don't know what is going on with Facebook, but Facebook has such a spam problem. Like, scammers can post as, you know, me or as anybody they want to, and it's like Facebook has no defense to it. I hope Facebook gets their act together. I just want to make a public service announcement. I will never ask you privately for Bitcoin. I hardly DM anyone. You know, to be so candid, I'm very busy, so I don't take the time to DM people. And I have, you know, a dedicated staff who's professional at working with traders on our specific products. If you ever are in question about whether or not you're speaking with me, you probably are not speaking with me. If you ever have doubt or questions, the only place to ever purchase products from us or speak with a team member of mine is on a1trading.com. Just want to make that announcement because unfortunately people do get tricked into thinking they're speaking with, you know, whether it be me or other influencers, traders, whatever. Just be careful out there. Good morning, everybody. Thanks for being here. We had CAD CPI this morning. I decided not to stream it, but I do want to just react a little bit to it. So let's pull up just USD CAD for a second. I believe that Canadian news this morning showed very light inflation out of Canada. In fact, let me just pull up what the latest was out of Canada. We're going to go economic calendar here. We'll take a look at it. Okay, yeah. So the consumer price index year over year was expected to come in at 2.7. It did, in fact, come in at 2.7. You've also got the month over month came in light, and let's see, core came in lighter than expected on a month over month and much less than expected year over year. So some inflationary progress. In fact, wow, core inflation in Canada year over year is 1.6%. That's pretty good. Okay, so 2.7%. The previous was 2.9%. So it's fair to say that inflation in Canada is making some substantial progress. And so what does that do to the Canadian dollar? Now, remember, currencies 101 is if you're somebody who trades FX, light inflation leads to the central bank probably not needing to cut interest rates, or I'm sorry, wanting to cut interest rates sooner, because if their economy starts to, you know, continue to slow down, that is usually what causes inflation to slow down, is usually a slowdown in demand, like product demand, right? People, a lot of times the prices continue to go up when the economy is strong because people are out there spending money, they're buying houses, they're taking vacations. Again, that spending of money is what kind of elevates the prices. If demand starts slowing up, whether it be because consumers are feeling the burn or something else, that is something to pay attention to. Now, even though I don't trade the Canadian dollar very frequently, I do think this is interesting data. And it's interesting for gold. I mean, inflation, that report for Canada is actually bullish for gold. Because again, you might not trade the Canadian dollar, But inflation cooling in any of the major Western countries, Canada certainly being one of them, our northern neighbors here for the US traders out there. Canada seeing some inflation cooling is a good sign for gold. Remember that gold does not trade strictly and solely on the US, even though the US dollar is a huge, factor to how gold trades. It's not actually the only thing that impacts the price of gold. You can see clearly the market for gold is actually cheering inflation cooling off. Now, what I've said a lot of times on this channel recently is that I don't know whether or not the slowdown in economic prints and inflation prints is something that is just going to go like this. So let's say that this is the economy for a second, and let's say it's the global, we're going to put G eco, global economy has been relatively strong. And in the possibility of getting inflation under control, it's pretty apparent that the market needs to see, the economy just at least moderate, slow, in order to get inflation under control. Okay. So the thing, however, is I don't know if this is possible to do before the economy just proceeds to grow again. Let me back up and say that. I didn't say that very well. Let me try that again. If growth is really strong and you need to get inflation under control, you need to see growth stall or just pause for a little bit. But I don't know if you can get it to just pause a little bit and then it just proceeds. I think what very possibly could happen is that it slows, but it usually, when the Fed does something, they usually overdo it because it's just hard to predict what markets are going to do. So when they start slowing the economy finally, I don't know that you get to see this, right? Just mild slowing and then we shoot off again. I think that what we could see is we could see a bit more prolonged slowing than people might expect. Because again, the Fed doesn't know everything. The Fed has been cheered a lot in the last few years for potentially pulling off what looks to be a bit of a soft landing. But the question is, how soft is it really going to be? And if it's not actually that soft, meaning you don't see this and then just, oh, we're back to, rainbows and sunshine. If you in fact actually see more like this, that's an environment where I want to be long gold, because in that situation, stocks might not be, going straight up. If you do start to see the economy and thus earnings start to slide a little bit, stocks might not be the holy grail that they have been for the last few years. That being said, I've mentioned very clearly, I don't know. I am not a fortune teller of what the global economy is going to do. I simply react to the trends that I'm seeing. So that being said, I own both gold and the stock market. Okay, so I am long VOO. So here's my VOO. This is the S&P 500 position that I have from the pullback that we saw in April. I built a position, and I also have an aggressive sized position on gold, which has worked out very, very nicely for me. You can see the trade is floating around $17,000 at the time of us streaming here. So trade's working out pretty well, but what am I doing with it? Well, let me pull up gold and I'll show you. On the 4-hour chart, what I'd like to see is, again, we're doing very simple handling of this trade. I did a whole rant yesterday just talking about how when I finally have a good trade, like a really good runner on my hands, I'm very careful not to screw it up. So I talked about yesterday. Yesterday, a lot of people started getting really bearish on gold on this candle. And I made a video yesterday. You can go back and watch it if you'd like. And I pointed out that when looking at the price of gold, this did not faze me whatsoever, because this doesn't tell us that the whole party is over, right? Because it's so hard, and I've made this point many times, it's so hard to call the top on gold when it's in an uptrend. Same thing with the NASDAQ, same thing with the S&P 500. Trying to call tops in a roaring uptrend is so dangerous, and so many people lose so much money trying to do that. In fact, guys, let's check I'm just curious to see what retail sentiment is looking like. Gold is kind of mixed right now. I was actually surprised by that. I thought that maybe, we do see a slight shift, slight preference for retail traders shorting gold. I believe that when gold was making, fresh highs, this actually was more polarized. I think at one point we saw like 65, 35 or whatever, towards retail traders shorting gold. But a common trend that we've noticed here on the channel is that usually when something is screaming higher, retail traders typically just short endlessly, right? They just keep taking L's and adding to a loss and hoping that the market will reverse. But this trend is well supported in my view. I stand strong on that. I have stayed bullish for like a month and a half now on gold. I've not wavered, and I'm not saying that like, oh, haha, see how right I was, because there are plenty of times where I just get it dead wrong and I put it up on video on YouTube and I talk about the losses too. Like I tried to short oil. That was silly. I shorted Bitcoin. Bitcoin's hitting highs. I already stopped out of those trades, took losses on them. So I'm pointing out, I'm trying to point out both my wins and losses. But right now, what I'm telling you is that for me, over my years of trading, the stuff that I like moves the needle for me, like the stuff that makes my account grow, is when I hold on and potentially even add to my best trades and my winners. I could take like 5 losers in a row, and that 6th trade could be the one that pays, for all of them and much more. That's my trading style because I trail stops. I'm occasionally catching the really big runners. So when I look at gold here, when I say I'm not phased by this, I'm not telling you, oh, well, it's certainly going higher. I'm just saying that I think for now, the path of least resistance is continuing to the upside. And I have my stop loss there to protect the trade in case I'm wrong about that. I've been, adding 1, 2, I have 3 different trades, multiple times to the upside there. But now the question is, with this trade, am I going to trail my stop loss here? I am going to if we take out the highs. If we take out the highs, I'm going to go ahead and trail my stop. But otherwise, I'm fine to hold this through consolidation. As long as we don't break the 2400 level convincingly, I will stay long gold. And the other contingency there, I guess, is when we go to the top setups page, I want to see gold stay as a bullish reading on the EDGEFINDER. What's getting us this bullish reading is the commitment of traders data shows that institutional money still is very bullish on gold. Seasonally, it's a good time to stay long gold. And in fact, let's go through this. Why not? We've got the time. I want to explain this trade so that, I know that a lot of people probably are tired of me talking about gold and talking about my position, but I am also trying to do the best I can to explain this trade in depth so that maybe, for my own selfish reasons, I want to reinstate what got me into this trade so I can do it again, right? At the end of the day, somebody who's going to be trading profitable needs to be able to do something repeatedly. So let's study this trade and what got us here. So if I look at the commitment of traders data first, this is the stuff that got me here. And again, I know sometimes people will say, well, Nick, you're just showcasing the EDGEFINDER and you're trying to sell the EDGEFINDER. And that is true. I am absolutely trying to sell you this product. But I also genuinely, wholeheartedly, this is what I use to trade. This is why we built the EDGEFINDER the way we did. It is how I spot my trades. So the COT data, let's go through it. Gold has in terms of the futures contracts tracked by the commitment of traders data, 79% are long contracts. So that right there from the non-commercial side of things shows institutional interest is to the long side when it comes to gold. But let's keep going. Let's scroll down here. This is the latest weekly filing. So in the latest week, we've got our short contracts traded and our long contracts traded, okay? So they added nearly 5,500. Now, this is not contracts. I think these are maybe lots of 1,000. I'd have to check. But they significantly added long contracts, and they just mildly increased short contracts. On a net basis, you can see there's 277,642 versus the short, there's only 73,146. So some institutional traders are still bearish on gold. They're not all uniformly bullish, but the majority, and this is how we track the COT data, the majority is long. By the way, while I'm speaking about the commitment of traders data for a second, we are doing a giveaway. That giveaway for the Edge Finder is ending on Friday. We'll be announcing the winner on stream. If you guys would like to enter the giveaway for a chance to win a free copy of the Edge Finder, we're going to drop a link to that in the chat here with you live. If you're hanging out with us, make sure to take a second to enter the giveaway if you have not already. And fair warning, there's no benefit to joining it more than once. It removes duplicates. So if you're looking to join the giveaway, take a second to do that there. And if you're watching on Twitter, maybe James or Chandler, somebody could just put the link there as a comment below the Twitter live stream in case we haven't already. Okay, so let's keep going. Again, enter the giveaway if you have not already. It is free to join the giveaway. All right, so gold institutionally looks pretty good, but let's keep going. Let's talk a little bit more about what else is keeping me bullish on gold. Let's take a look at seasonality. And seasonality, guys, I don't know what it is. People tune out when it comes to seasonality, but it's like one of the most powerful indicators that I know. Okay, seasonality is so simple, yet so powerful. Check this out. What we are looking at is the historical tendencies of gold on a month-to-month basis. On a 10-year average, what we see is that during the month of May, there's a 0.7% gain. So May is usually, on the last 10 years, it's usually been a bullish month. Now, May, we've got a little bit of time left in May. June is flat. July is flat. So we don't get much to boost us in the months of June and July, but May is still alive, and we've had a really good delivery in terms of seasonality this year. Seasonality has been pretty spot on in the last few months. Okay. So again, seasonality matters. We talk about seasonality very often, and just I'm not going to get too far off course, but let me just point out also another really important seasonally thing is the S&P 500 is entering a really seasonally good time of the year. So that's part of the reason why I'm also long S&P. Just wanted to mention that while I'm on the topic. So seasonality is really key. If you have the Edge Finder, just go to seasonality. The one I'm looking at is the month of year trends. Okay, the other things I want to talk about just briefly when talking about gold is that gold, remember, if the economies of the world look like they are declining or even normalizing, even kind of slowing down at all, that is usually considered bullish for gold because, again, gold is an alternative. It's a safe haven investment. Traders, investors may park money in gold if they're concerned about the economy, if they think a slowdown or a recession might be on the horizon. It's kind of like a buy the rumor, sell the news sort of thing. And, when we look at GDP, we do see we had our first kind of miss. Advanced GDP numbers will probably get preliminary pretty soon, I think. But my point is this, again, the economy out of the US seems to be showing signs of slowing. And don't just look at GDP data. We can also look at purchasing managers. This is a forward-looking indicator that I really like. It's a survey of purchasing managers in the services and manufacturing sectors. And we can see some slowdown in that because, again, the numbers came in lighter than forecasted. Retail sales also bode a little bit poor for the consumer. Retail sales came in lighter than anticipated. So lighter than anticipated in the month preceding it. So April through May 15th. We saw retail sales come in a little bit light. Next up is jobs. So jobs, we'll get, of course, our next round of jobs pretty soon as we go into the month of June. But jobs data has come in light. Okay, so light job data for the first time in a while. In fact, I built this secondary chart here. This was our first significant miss on magnitude-wise on jobs in a little bit of time. So jobs growth slowing down, and I could keep going down the list. I mean, we could take a look at unemployment claims. Unemployment claims have ticked up. Job openings have been trending lower in the US. Unemployment rate has been trending higher in the US. So all of that to show you guys, again, at the end of the day, when I place trades and I show you guys my trades on live streams, I'm showing you my hard-earned money in the markets. And the reason I show you these is because also when you see me using these tools, these software tools, I am genuinely putting like my hard-earned money and my career on this tool, on my trading strategy, my trading approach. I point that out because I don't think a lot of influencers do that in the trading space. They don't show you live brokerage accounts. They don't show you, what they're doing. They don't, point out both the wins and the losses. And I say that, of course, not just to pat myself on the back, but for you as a viewer, you should have enough respect for yourself and for your time that people that you listen to, learn from, and purchase from should show you live accounts, in my personal opinion. If I was back trying to learn this stuff again, one of the biggest tips I would tell myself is I'm not going to spend another minute with learning from trading influencers who don't show any sort of trading performance, any live accounts, any track records, nothing like that. Because how do I know I'm even learning from somebody who actually does what they say they do? So when you purchase a copy of the Edge Finder or you join our VIP group, the cool thing is that you are also following along with traders who trade real accounts. Okay. That is something that I stand very strongly on and find very important to discuss on a regular basis. That is why we talk live accounts so often on these live streams. Bitcoin just hit 71,000. Also, last call, if you would like to join the Edge Finder giveaway, Edge Finder giveaway is going on this week. We'll be giving away a copy on Friday. If you have not joined the giveaway, again, click the link that's been dropped in the chat. And if you're watching on Twitter, there should be a comment below the live stream that you're watching. If you'd like to enter, it is free to join. There you go. Okay, into the giveaway there. Yeah, so what else have we got? We got yields down this morning. The 20-year yield is down 0.81%. That's probably TLT coming back to life a little bit for me. I'm still in the red on this trade. It is a bit of a lengthier, a longer term trade. TLT being long, TLT is somewhat like being short the dollar. And I kind of maintain that bias for now until something changes. Yes, the dollar, there's a case to be made for the dollar still looks good relative to its peers because other countries are going to cut rates, but that's been the known fact. Now we've got new information. Now we've seen, again, data starting to cool out of the US. So there's a little bit of a rebalancing trade, I think, for the dollar that's starting to form. The dollar, has had a really good stretch for a while, but on a longer term basis, it's pretty dang range bound. So I don't know. I think for now, there's a little bit of a downside for the dollar. I've been on that trade for a minute, and we'll see if it sticks around. Here's oil. Also, oil down near 1% today. Gold flat on the day. Silver just slightly green. And again, Bitcoin might be crossing its highs pretty soon. We are trading just shy of 72,000. The previous all-time high is right there at just about, let's call it 74,000. We'll see if it can try to break higher. Euro USD has been moving higher here recently, pulling back a little bit. Pound USD seems like it wants to be breaking through this level of resistance. Might be headed up a little bit higher in the meantime. Again, momentum right now, in my opinion, favors dollar bearishness. If something changes in the data, of course, again, I am agnostic to what direction. I'm just looking at the data. I'm just following what the system is showing me. Speaking of system showing me, again, dollar Swiss on the bearish side, US oil still bearish overall. Bitcoin actually coming in as a bearish reading again. Gold bullish, euro, pound bullish. TLT. So this is the 10-year treasury bonds. TLT is a 20-year treasury bonds. Generally speaking, I'm going to be bullish when this is bullish. This is saying that 10-year treasury bonds are looking bullish according to the Edge Finder's calculations. Again, economic data showing signs of slowing means yields might come down, and hence bond prices would go up. Remember that bonds have an inverse relationships to the underlying yield that they offer. The DAX is bullish, Euro Aussie, Euro Yen, Euro CAD getting bullish readings. Silver bearish, copper bearish, US oil bearish, and dollar CAD very bearish. So kind of interesting there, dollar CAD. Although I don't really like that trade. I have mentioned I'd like to see this thing break support before getting any sort of involvement. Real quick, guys, we're going to take just a quick commercial break, and then we're going to be back, joined again with Eivind for a second time this week. We are blessed, so stick around. We'll be right back.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right, and we are back with Eivind again. Hey, Eivind, how's it going, man? We got I played our intro music for you just to be intense today. How's it going, man?
It's going all right. It's going all right.
What's the latest? Market's not making too much of a move on the S&P. The Nasdaq's down just a little bit. Dollar index flat on the day. VIX is up just shy of 2%. What are you watching today, Eivind?
Anything that it's stronger than CAD, I think, is my strong today. I was trying to find. There was somewhere on Financial Juice that said that it was priced in 48% of chance of having a rate cut in June. And by this now, I think we're going to go closer to 90, closer to 90 being having a rate cut in June. So anything CAD weakness, though it went in line with expectation, but still 2.7 is 2.7. So that is great.
Yeah, and I noticed also that the core value, or the let me see where I've got it pulled up. Bank of Canada Consumer Price Index core year over year did come in pretty significantly light, 1.6%. Some progress on the inflation front. Gold initially liked it as well. Which currencies, if you were to trade the CAD, are you looking at the dollar? Are you looking at pound? What are you thinking?
Well, pound came out with a very good GDP last week, or I think it was last week. So that's a good candidate. That trend is already already popping. So I feel like I'm a bit late on that trend. But yeah, why not continue? But the one that I'm mostly thinking about is Australian dollar against the Canadian. Australia being strong, seeing that one continuing, and then New Zealand CAD might be a one. But I'm not the one that is doing the crosses. I don't like the crosses. So
Sure.
if yen could be strong,
yeah, CAD yen.
I'll take that one.
So, so you're saying Aussie CAD, but you're not really interested in trading the crosses. So maybe dollar CAD or CAD yen. Those are kind of your primary ones to look at.
No, so the reason here is I want to find. It doesn't really matter what it's called. Just to get myself clear, it doesn't matter what it's called as long as I had the strongest against the weakest.
Sure.
But when you have declining inflation, the global outlook looks grim. Everyone is having declining inflation, generally speaking. Growth is slowing. Unemployment is going higher. That's not great. Fantastic for commodities.
Yeah, no, that makes sense. Speaking of that kind of trade, I mean, if global growth does start to slow, do you think the yen is just going to continue to blow up, or is it going to find buyers if you do start to actually see a slowdown? What do you think about the yen?
I like the small little pullback it's made today. I hope it can be deep. Deep. So I can buy it up again. I think that what's currently happening is that we are going in a certain way that is a bit too fast. So a deeper pullback would be great. But I think this one, the yen is going to go lower until they change monetary policy. They haven't done it yet. Dollar yen, which kind of is like the one we have to look out for, it's just 156. It's not 160 or 158. So there's still a lot of room for yen pairs to go higher.
Yeah, yen pairs have been an interesting one. They've of the list. I mean, they've always kind of been the volatile ones, but especially this year, 2024 has been just super volatile for the yen. So you mentioned something there. You mentioned that the yen will remain weak until they change monetary policy. What kind of change are you talking about specifically?
First of all, they need to increase their interest rate. But more evidently, they need to stop spending 6 trillion yen a month buying bonds.
Sure.
It is, I don't know how many zeros that is, but it's a good amount.
So why is that hurting them, Ivan? Because 6 trillion in yen, they're buying their own bonds. What is their objective with buying their own bonds like that for people who are kind of newer to fundamentals? Bank of Japan buying, their own bonds. What is the thought process there?
So the thought process of buying bonds is to which you're basically who you're buying it from, which normally banks. So you are basically giving money to the banks for the bonds you're getting, and then with those money, the banks should give out should then be borrowing that out. So they are making it easier for people to borrow, to loan, and that's how we in this kind of world are trying to stimulate the economy. And that when you have lowest zero interest rate, so it's basically free to loan money. There's a lot of money to be borrowed. So that should make people borrow money. The implication of the fluctuations in the dollar yen is one, Japan is 100% reliant on importation of oil. So that's going to be more expensive. And then it's for every business that is trading with a yen has lost its value against the dollar. I think it's more than 30% just this year. I'm gonna check it was 13, sorry. 11% in 3 months is a lot for a project.
Yeah.
Or anything to move. It's way higher than
their
CPI.
import prices are very expensive, and doing business outside of Japan becomes more costly for them.
Yeah. So it hurts the economy in that way where anything outside of Japan becomes very difficult or very volatile. So you want that to be stable. You want that to be quite, the same thing. And also then the oil price went to $80 or $90 a barrel. So that's not great for an economy where you're trying to create inflation, trying to create jobs.
Yeah. And Ivan, what about this? Here's something else to think about. The Nikkei, the Japanese stock market, at the turn of the year just went crazy parabolic. And I believe, I didn't follow the story incredibly close, but I mean, that's a 25% move on a stock index. And it was a big jump in large part because there was some evidence of growth in Japan. Is that right? I mean, that's what I remember. Kind of the story that I kept seeing is maybe some growth is creeping back into Japan, and maybe finally this massive, terribly long campaign of dovishness from the Bank of Japan, like maybe they're seeing some progress. Is that just completely lost now? Is that reversing?
Current inflation in Japan is 2.7. So there was inflation. Well, still above their 2% target. But it's not, by the amount of money they're spending and the lack of results they're getting, it is almost ridiculous at this point. But we have to add.
You expect them to be seeing like 4% inflation, 5% inflation if it was a Western, economy, and we just, cut interest rates dramatically, you would expect growth to just go crazy and hence inflation to go crazy as well. So yeah, I mean that's a good point. You've got all this spending that they're doing, all this stimulus, all this, low borrowing costs and buying their own bonds. And yet, as you mentioned, they're only at 2.7% inflation. And for newer traders, inflation itself is not actually a bad thing. Usually, a 2%, 3% inflation is relatively healthy. You don't want to see incredibly high inflation or incredibly low inflation. And while a lot of other countries have been battling, high inflation, UK, US, Canada, etc., Japan has been dealing with the opposite problem over time. They've had trouble getting their inflation to move higher, and to, more importantly, not just real growth minus inflation, to actually be very positive. They've struggled with that, I believe, for like decades, right, Ivan?
Yeah, 30 odd years.
Yeah.
I just found a chart that I think is going to explain a bit more why. This is the average cash earnings. So they don't really have, what do you call it in English? They don't increase their income.
Wage
They
growth.
just
Yeah.
the wage growth is slow.
Mm.
So that is an important. And secondly, we have culture. Or thirdly, we have to talk about culture. The population in Japan is growing elderly, and those elderly people that is now working, they don't spend money. They work most of the days. Secondly, they want to save because they have been through rougher times before. They don't spend. They overwork, and they don't do what we young people do, which is traveling and everything in large masses, which hurts the economy at the end. So who's going to take over for these people?
That's a really good point too about population. I've just shared a view on my screen too, just while you were mentioning that. Inflation's been declining in Japan. And remember, guys, for the strength of an economy to grow, the whole idea behind like GDP goes up year over year is, is it possible for the GDP of Japan to go up while their, population stagnates? It is theoretically possible if there was like a fresh wave of innovation or new technologies or, some revolution, that is technically possible. But the deterioration in population works directly against that concept of like how GDP grows over time. New people are born, they go out and they spend their money, they buy houses, they stimulate the economy. If more and more people are flowing into the system, in the US, we a controversial topic is like the concept of immigration, right? A lot of people immigrate to the US. Some people love it, some people hate it, but the truth is it does contribute to a growing population, does contribute to a more active economy. So this deterioration in Japan, we're doing like a deep dive on Japan today, Ivan. I appreciate you going through all this with me. It's a very important statistic to keep in mind, is the actual population growth of a country. If it's deteriorating, it works against the GDP growth, and hence why maybe Japan has had such a struggle with actual growth itself. So I don't know. What do you think, Ivan?
Yeah, because if you look at China, but my little problem here is, this is what I'm showing, Chandler. Is productivity. In Japan, this is since the 90s. I think that's the reference point. We are just at 104 points, and the index is 100. So we have just grown up, what is it, 4%? I'm not too sure how to read it, but about 4% up since the 90s. That isn't a lot of growth in productivity. So to me, it seems like they have flattened or peaked or topped or stagnated. Is that the word, maybe?
Sure.
Because in an economy, generally speaking, who is growing, you will have higher productivity. You would have higher participation in the end, because you would have so many people that one guy or many guys or many people, will create new jobs and create better innovation and create better machines and create better systems. We will, in the end, get to a much wider economy. Though Japan is very robust, it is very great, but in my fear is this the decline? Is this not the end, but is this where we kind of have to do a dip for a long time before we can get back up again?
Yeah, it's really interesting. I've just been flipping through also population comparisons while you're speaking there, Ivan, too. Like India has a 0.7% annual change. A lot of people are very bullish on India. I don't have the data in front of me. I really would love to, maybe do some more research on India, and maybe at some point even add it into the Edge Finder. But like PMIs, I believe, are very high in India. Like growth, it's like one of the leading growth economies of the world right now. But let me caution you, that was the story for Japan in like the 80s or like the 70s. There was a period of time, my dad has spoken to me about it, where the whole world thought Japan was going to just take over. Like they had all the growth and innovation, and I mean, Honda engines are pretty awesome, Toyotas are pretty awesome. So there's a period of time where people thought Japan was going to be the next big thing. It's really hard to predict which country is really significantly on the rise. The US does have population growth at 0.4%, but you can see that's a pretty significant low in recent recent decades. Just something to, I think globally there's a trend towards slowing population growth. But anyways, we could go down that rabbit hole for a lot longer. Just an interesting topic in general. Ivan, back to charts for a second, I suppose, now that we've done our full circle here. What else are you watching? Any other charts that you have trades on or that you're looking at?
Right now, as I'm speaking with you, I am seriously looking for pull. I think I'm just waiting for tomorrow. I would just want this volatility event to be over. And then I'm going to buy some CAD pairs, also sell the CAD against something. That's what I'm looking at. Dollar CAD, Aussie CAD, New Zealand CAD is probably probably the one that I'm gonna look more into. My only problem is this trend we've already had. So there is a lot of in me that I need to teach people. At least I want you guys to know that there is a concept of velocity in the market where we will only go 2 standard deviation away from the mean, and when we go too fast too quickly, we tend to pull back. And I don't know if these pullbacks are good enough for the move that it has done and created higher. So that makes me a bit more worried, because as you can see here, this is kind of what I'm talking about. When market goes very fast, it comes very quickly back again.
Yep.
So I don't want it to go too fast.
It'll be interesting to kind of just see where that inflation story. I just wanted to pull this up too. Let me see if I can get CAD inflation. I don't know if it's in yet today. It might not be. Not just yet, but the trend overall for CAD inflation seems to be pretty closely tied with the US inflation, except in recent times, a little bit of divergence there. Today, we came in line with, what was it, what was the number again today? Was it
2.7?
2.7, yeah, so 2.7. So we'll see when this comes in, something like that. So similar to the US, but actually even more decline, I suppose. Kind of interesting just to keep an eye on the rate of inflation. I like to use this chart just to see where all the central banks are as we continue to see 2024 as a race towards rate cuts. And with the US now starting to see some capitulation on some of the economic data, I think it may lend the other countries to start cutting rates even sooner. If inflation in Europe and Canada and all those other places is normalizing. I mentioned recently on our conversation that UK inflation actually has come underneath US inflation recently. So just an interesting one to keep an eye on with that front. Ivan, I have a question for you. Do you want to lead the show for a little bit solo?
Okay, I can do it.
Okay. Yeah, if you'd like to take over the show, you're more than welcome to. You can go through whatever you want. Before I step out here, let me just also mention Ivan has his own YouTube channel. We'll be dropping a link to that in the chat. I think we already did, but if you guys make sure to do us a favor, subscribe to Ivan FX. W on YouTube because he gets the W's, and you can find him there. If you're watching on Twitter, you can find him on YouTube if you want. I think he also has at IvanFX, maybe W on Twitter. I don't know.
No, just normal.
Just normal. You can find them on Twitter. And last thing I will say is if you have not already entered the EDGEFINDER giveaway, remember we're giving a copy away totally free on Friday. Enter using the link being dropped in the chat. And if you're watching on Twitter, it should be pinned or a comment below the live stream. So Ivan, you got it from here, man. I'll do just a quick little break to exit sequence, and then you've got the show for a little bit and end whenever you're ready.
Thank you.
All right. See you, man. Real quick, I wanted to throw a shout out to our stream sponsor here on the A1 Trading Show, Forex VPS. If you haven't heard of Forex VPS before, they are a dedicated hosting platform where traders, especially algorithmic traders, can set up an in-the-cloud computer to run their MT4 24/7. If you have any experience trading with robots on MetaTrader 4 using expert advisors, they have to remain up all the time, and keeping your computer on is not always practical if you have like a power outage or that sort of thing. And with Forex VPS, you can set up a dedicated hosted computer in the cloud to host your MT4 or 5 platform. They have the fastest execution in the industry with latency less than 1 millisecond, which means when you place trades or your system places trades, it's near instant. So I've got my VPS open here from Forex VPS, and you can see, I just want to show how quick the latency is here. So if I click sell, you can see it is right away. I'm in the trade, all set, as if I was sitting on this computer, even though it's somewhere in the cloud. For stream viewers right now, Forex VPS is offering 30% off of your final subscription. If you're interested in giving it a shot, there's no risk. Why not? Use the link down below and the promo code there, A1Trading30 for 30% off. If you're watching this stream at a later time, you can also find it linked in the description below.
Welcome back, everyone. So, I think it was Ross. You asked. I think you said, Russ. You said that isn't lower inflation good for our currency? It depends a bit. Okay, as I'm going to do a little bit of 2 seconds of education, people. This is very important for you guys, you know. So, at the beginning, yes, it is a good. Sorry, good inflation is good for the currency. It's going to lead to higher interest rate. Woohoo! It's going to lead to more money to you by holding that currency. Good. It comes a point where it is too much. So, if this CPI, this white one, is 10%, it is no longer great for the currency. For that to be so high, and then markets now it's going to start speculating. That's probably more what the green is more the market speculations that we are now going to start peaking. We are now going to start, and then the market will start falling before the fall happens. So, I can also probably do like an interest rate curve probably as well. Where did it go? Like the interest rate curve probably does something like this. And then inflation is there, and then it's a bit light, and then probably a bit like this, and then starts going back down again, and then flat, and then yeah, it's always light. That's what I'm trying to do. Okay, so. And then I can just add like that, because inflation, interest rates doesn't start increasing until we have seen sufficient evidences, right? So, for a currency, isn't that good for a currency that inflation is falling down? Yes. Also, where you are here, where CPI is still falling. Then we're going to start bottoming out, or at this point, with what we're doing currently, we are topping out. So market's going to start pricing in. So now they're pricing in rate cuts. Okay, so the market is trying to price in what is currently happening here. This is at the moment a TM at the moment, because inflation has fallen from 10 to 2.7 in Canada today. So that is bearish for the economy. But when they start ending that rate cut, then that's going to re-energize the currency again, because it's a depression, or it's depression, I guess is maybe the word, contraction, for someone to cut rates. So for a commodity like Canada, it's going to fall when that's the only one in the entire world having low inflation and having to cut. But if Canada, New Zealand, Australia, Europe, UK are all cutting, all having lack of inflation at the same time, as well as America, as well as the big boy waiting for, holding everything together, that's good for the economy. That's good for this for the currency. Like COVID, in COVID, during what, Q2, Q3, Q4, like the fall, though the commodity currencies were strong. CAD was strong, Aussie was really strong, New Zealand was incredible. But we saw job losses, we saw lockdowns, we saw a lot of bad things in the economy, but they were strong because everyone was doing the same thing at the same time. And then also probably America was doing a bit more QE than others. Point taken. That led to dollar being the weakest, right? So there is a bit of a different curve to a bit of different things. So CPI is one curve. Interest rates a different curve, because that's always going to be much later, as I have tried to describe here. And then the market pricing, the currency price, is going to have a bit of a different life again, because that's going to be 3 months ahead of itself of what we expect the economy to be. So what are we now? We are in May. We are now pricing in what's potentially going to happen in August, especially in June, maybe also July. So what's happening in June? Rate cuts, rate cuts, rate cuts, rate cuts. Canada, UK, Europe, and what was the last one? Okay, sorry, just 3 then. At the moment, priced in. There was supposed to be a US one earlier this year by March. Was supposed to happen in May. Was supposed to happen in June. It might happen by the end of September. So what does that lead you to? Let me have an update on our biases. I want us to have at least. CAD, in my mind, is bearish. Because of the fall of the inflation, because also the central bank has opened up for a rate cut. They paused over back in, was it February something? Then they stopped hiking, and the market is now preparing, or preparing the central bank to cut rates. What does that mean? That means that the market has priced in already a rate cut by the time the rate cut, so that it doesn't become a very big spike, but it's just a small little thing. But if you start looking into interest rates and when they happen and how they are priced in advance, and then, for example, for pound, for Bank of England, always when they were increasing interest rates, the market would fall. What happened? Well, what's going on? Why did pound dollar fall? Because the pricing in happens in the weeks and months ahead of it. So it had already gone up to target. It had already gone 300 pips. It's already done this trend. That is where I am. So, does UL yields direct us about gold? So, not really. Let me do another. Is this teaching class? Can somebody say no to teaching class, and then we'll stop teaching class, because we're going into teaching class here now. So, black. Okay, that was not the one. White, and then in the world of trading, please. Thank you. There's a triangle. There's a triangle between, so you can add gold to be one of them. You can say that bonds is one of them, and stocks is one of them. So gold is basically commodities, and you are in the middle. Okay, this is you. Are you happy? I didn't nail it, but sorry. Your mouth is not on your cheek, mate. Okay, sorry. You don't have a mouth today. You don't have a nose either, but here you are in the middle. At any given point, you are going to decide where to invest your money. And what decides if you're going to go for stocks, bonds, or commodities / gold is risk. For if it's low risk in the market, you're going to go for stocks. That's most stocks, at least, not entirely stocks, but most of your portfolio are going to be stocks. The Norwegian oil fund is 60-40% in stocks, and some other percentage in real estate. Secondly, if you have a very risky environment, are you going to go for bonds? Or are you going to go for gold? What are you going to choose between gold and bonds? One is which bonds, whose bonds, and what returns are you going to get? If you're going to go for US bonds, you're going to get, what is it now, 4%? 480 for 2 year, or 440 for 10 year. Okay, that's around your mandate as a fund. Around 5% is good returns. If you have gold, is gold going to do better for less risk than bonds? And yes, but then we need to have not rising interest rates. We need to have a peaking of interest rates. Why does interest rates have anything to bother here? Cost of financing. It has to do with economic growth. It has to do with America doing well relatively to the rest of the world, and the rest of the world is kind of falling down. Where do you put your money? You put your money in gold. You put your money in bonds. You put your money in safer assets. If that is called gold, not really. Commodities. Sorry, that is gold. Sorry, and you won't do commodities. You won't do palladium. You won't do silver. You won't do other assets, metals, oil, for that matter, because they're very volatile. You're going to lose a lot of money when you have a lot of money in an economic downturn in the world. Great. Why is Bank of Japan looking for a rate hike where inflation is already low, but the stated inflation target is 2%? Okay, that's a very specific question, Altaf, but I'm going to answer you very quickly, then I'm going back to charts. They are, sorry to say, blind, because they have had 2% target, and inflation has been above their target for 14 months now, I think it is, or something. Why they haven't? Why are they looking for a hiking interest rate? Because you're supposed to, generally speaking, as a central bank, you're supposed to be within 1%. 1%, within 1% of inflation, and interest rate should be around 1% difference, give or take. That's really the best. Currently, it is around 2.5. So that they should close the gap. Same thing with Canada. Canada has when inflation is around 4. Sorry, interest rates are around 4 and 5%. Inflation rate is 2.7. Close the gap. So what they should do is raising interest rates to close the gap to inflation. So yes, it is low. It is not high enough for them to do it, but it's still within technicalities, technical governance of a country. They should, but they haven't. Chen, that's all right. So let's go for a bit of trip here. I hope that, being arrogant here, I hope that you are very familiar with when the market falls hard, like it has done with interventions of Bank of Japan, presumably, where the market in this case are falling hard. What do? I normally say, I am not trading it. I'm not even close to it. That is not an environment I want to be in. Okay, so what environment do you want to be in, Ivan? With my fundamental bias, where yen is weak, where in this case Australian dollar is strong, I want to and I need to look for a bullish trend. When do you get it? When it crosses above the previous high. The previous lower high is either that one or that one on the 4-hour chart. On the 1 hour, it becomes, those ones. So at this point in life, that's where it's bullish until it makes a new lower low. Okay. I have not seen a new lower low on Australian dollar, Japanese yen. I've not seen a new lower low on euro yen until now, maybe. I haven't seen a new lower low on US dollar, Japanese yen. But on the other side, I've also seen deeper pullbacks. That's worrisome. But when I am looking for a trade, I'm looking for something to do with my money, I say, okay, it looks great, doesn't it? To an extent, it does look like a great continuation trade. Let me take it. My only problem, and this is for my risk, we have already risen about 300 to 400 pips. I don't like that. That is not in my vocabulary of great, we are starting a new trend. That is me trading end of a trend. I am still a firm believer of the continuation trend, but I'm also a firm believer of tactical entries. What is tactical entries? Tactical entries is to know on a bigger time frame or a bigger viewpoint that this is the best, or the best. It is a much better price. The second question you have to ask yourself is it likely to come down to that one? And in this case, at this point, it doesn't. All right. Then what is your mind going through then? By the way, this is not financial advice whatsoever. This is just theory and educational. Is you are continuing to looking for bullish trend until you don't have that anymore. Russ says, I'm worried about the carry unwinding. Yes, that's when Bank of Japan changes their policy. And at the moment, your only problem with that is that you are only as good as your risk management. You're only as good as the market is able to give you liquidity in that moment to get you out of the trade. Right? So, for those who knows, but I'm going to give you a little, not story, but I'm going to give you an example. Roald Amundsen, a famous Norwegian, not traveler, explorer. He traveled to the South Pole. I think it's that guy, Amundsen, one of those people. He was the first one, but it was harsh. It was horrible, and there is a lot of stories about them eating their the animals that had with them, but barbaric. But that's what's necessary. Scott, the British guy, tried the same thing at the same time. Actually, went ahead of the Norwegian guy. He didn't do enough preparation, and that's why he lost the race. So, what is my point? If you're scared, then do it scared. But at least do it. What do I mean by that? Is I don't know where the peak is going to be. But I know what we're currently seeing with the confirmation we have, we are higher. And we are going to continue higher. Because that's what the fundamentals are telling me. Right now, I don't have any bearish outlooks for this pair. So I can talk myself out of it, but I've done that so many times in my life that I'm done with it. It doesn't serve me, because if I was trading CAD yen and I didn't trade here, and that's why I should have traded here. I should have traded. It looks so beautiful now in hindsight, but why am I looking at hindsight like I can do that? Look at me, I'm great. Has no value. So think to yourself, what are you supposed to be doing here? What is your competitive advantage? In what scenario? In what way? And for me, I know that my competitive advantage is here. Sorry, here. I love that. And I want that so desperately every single time. And then it happens again, but then it doesn't give me a pullback. Is that my competitive advantage? I still have it, but I didn't get my setup. So am I going to be crying about it? No, I'm not going to be crying about it. Jordy, I am talking about yen, yes, but I'm also talking about, generally speaking, I'm talking about you as a trader. I'm talking about you as a human being. And if you want to say, okay, CAD is going to be strong going forward, then CAD is probably going to be a thing. But I could also have just put my hands on euro dollar. That is not going lower at the moment. It hasn't made a lower low below 1084, which I said yesterday I needed, and then it has gone back up to 108.70, and it's fallen down to 105. I haven't got my continuation trade lower. I haven't got what I want to see. Games on computers, I have answered that thoroughly previously, a couple of years ago. Thank you very much, Russ. So, for you as a trader, and let's take gold for that matter, it doesn't really matter. Is this a competitive advantage? And then you can see, that's not my trade, by the way. You're asking this person that did this trade, do you have competitive advantage? Do you have clarity? Do you have profitability? And the answer to that is, that's what I told that the market should do. I don't know if that's good enough for you guys, but hey, trade plan is a trade plan, didn't trade it. Or for that matter, Nick's trade. So I am going to zone out from being this clown that somebody tells me that I am, and I'm going to go into Ivan. So whoever wants to listen to that, great. So in the morning, I look at the market before anything else. I look at technicals. I look at fundamentals. I look at Squawk. I look at news. I look at newsletters or whatever. I look at the edge fund. I look at something that would make me have an edge, or if there's new information that morning. And then we have I can't find it right now, but there is Word document of setups we're supposed to take as A1 traders. And what it is a reversals of trend and then trend continuation. If I'm looking at dollar and it takes me 2 minutes, sorry, half a minute, this is what I see, and I see a range. Range is something I do not have competitive advantage in. Let me leave it. For Australian dollar, US dollar, I do not have competitive advantage in a range, and this is also the opposite way of a range. So I'm still not trading it. Euro, dollar, another range, and lack of competitive advantage. What am I looking for? New lower lows. Canadian, also pound, sorry, going higher. Bullish range. I still don't have competitive advantage in this scenario because I'm looking for dollar strength. So I'm looking for that way. So again, I can't. That's your process in the morning, sir and madam. That's how difficult it is to look looking for trades. That is how difficult your life should be. And for every single one of you out there that is stressing about, I don't have time, I don't know what to do, I don't know how to do things, 10 minutes, if you're day trading, is all I require you to do. And then you can say, oh, S&P 500 is at 5,314. Or NASDAQ is at 18,658. It is at all-time high or equally so. What are you going to do about it? And I have one answer to you. You have two approaches. Number one, you can trade. You can look for the trend, or you can look for the pullback. And why are you looking for pullback? Because your all-time high. Third is education. What is education? Why didn't you buy 1st of May? Why didn't you buy 1st of April? Why didn't you buy 1st of March? And that isn't some, I think we did it one time where in 10 years you're going to be profitable on NASDAQ and S&P 500 if you just hold for 10 years. That is, what is your strategy? What is your competitive advantage? Is it to wait for the trend to continue? Is it the pullback? Is it that you have such a clear mind and education that you know that this one is going to come down by the end of July? You're going to have a lower price. You're going to have a better price. Okay. Chaudhry says he's waiting for pullback. Okay. That's all right. That's okay. I'm not forcing you to do anything. But when the pullback comes and the pullback looks like this, I don't want to see anyone crying over here and say, I don't know what to do. It fell down and it continued higher. When the pullback comes, you have a crystal clear mind. And that's not me being, everyone should have a crystal clear mind because I have. No, but you should work towards it. And what's a crystal clear mind is that how does a reversal on NASDAQ look like? Is it coming down and then it shoots up like a rocket, comes a bit down, shoots up like a rocket? Or is it range bound, and in the range bound, you're catching the bottom? You need to have tested and tested and tested and tested. And by the time it does come back down to 1770, if it ever does come back down to 17,700, you know exactly what to do. There is no time to be what do you call it in English? The guy that's being put on the plank on the boat, and you're standing here, and this is the boat. I can't even make a boat today. Okay, there's a boat, and you're standing there, out on the plank, wondering if you will be pushed or not. But that's the time to be brave. Okay? That's the time you know what to do. So, how do I expect it to happen? I honestly believe this is going to continue higher. I honestly believe that you're not going to get 17,700. And if you get 17,700, you are a lucky dog with two tails. Because the drivers of the market at the moment is the lack of inflation, is the lack of higher rates, and we have had a pause on the market for a good, from June, July until October with a pause, and then we had that move there, and then we might be around May. Where is May? May. I feel like we still have that to go left, and then we pause. I might be wrong. but you might not get your pullback you're waiting for. And by the way, if I'm going to say anything at anything in this world, I am going to say that November, I don't know which day it's going to be, 5th, 5th, 6th, 7th, 4th, around that time period, Nov 4th to 7th is going to be the bottom of a pullback on dollar on dollar CAD. Does that make sense, people? Is that something that you can wait for? Is that the retracement you're waiting for? Because I'm expecting you to go to your calendars right now. Like you go to October, what is it, 5th? It's a Tuesday. Okay. And the spelling's bottom of SPX NAS Dove starts at 0. Okay, it didn't work out even, does it? 0. Okay. What's another thing? What's another current one? I think that we are still going to continue higher. Are the current pullbacks that they are giving you on a daily pivot point, for that matter, is the current pullback today good enough for you? It would have been me if I was a day trader on Nasdaq. So, though whatever I'm doing is not financial advice, but that's kind of what I'm expecting to happen going forward. Coming back to M2, 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 and it doesn't always happen. It doesn't happen every single day. It doesn't happen every single day, but that's going to be the plan going forward. Okay, we're done with stock market. Secondly, thing that I also do, I buy every month, first of the month. That's where I mentioned why didn't you buy 1st of May? Because I mentioned that it's for me, it's a long-term passive thing that I do. I have given you the idea many times. If that's something you want to do, totally up to you. I'm not going to force you to do it, but that was the bottom, unfortunately for me. And that was the projected bottom. Secondly, what else has been asked about? I want to do one more thing. So Euro, CAD, and Pound will correct once they start cutting. Okay, there's a second layer to that question, and this is the day of cut. The question and the future of the interest rate is all about expectations. Is that the only Is that the only rate cut that year? Or is this the end? Then yes, we're gonna have a relief rally. We are gonna have stuff that is kind of against the trend. That's what likely to happen, but it's again based upon the current economic situation, the current expectations of future interest rates, which is probably going to be subdued from the central banks, so that you might get a relief rally if you are against the bearishness of these currencies, because everyone is cutting at the same time. That leads normally to bullishness on this ones. And then if dollar at the same time is also bearish, and then other commodities become stronger, yes, that is definitely a theory that you can play out very nicely. Just be very clever about it. Okay, I've been asked to do gold, and I saw that gold thing. So what am I going to do here? Oops, that was not the one that I wanted to do. So first of all, is that a pullback you want to buy? Is that a pullback you want to buy? And if that's a pullback you wanted to buy, did you buy it? is that where you have a competitive advantage. In my simple world, I see this as weakness. I see this as potential bearishness. I might be wrong, and I like to be wrong in this case. So how I would treat this is, as long as we stay above 2,405, that's kind of my line in the sand. It doesn't mean that, that's going to be bearish after that. It's just going to be like a bullishness. And if dollar continues to be weak, then gold is likely to continue higher. So if I were to do anything, I would then look for a pullback on daily. There's that one, and then there is the weekly one, which is not enough yet. Okay, those are my two kind of aggressive trades. If not, where I am more hoping for is much deeper pullback, and then coming back up again, because we have gone too fast too quickly. So how do you treat this one? You treat it as you have 3 different trades, 3 different options, 3 different hypotheses with 3 different risk tolerances, and none of those is going to make you cry. Okay? Because if you cry, what are you crying about? What are you angry about? What are you frustrated about? That your hypothesis at one point were wrong. Okay. You wanted to buy gold. Okay. Gold is very bullish. Gold has gone very quickly. Gold has gone away from where Nick had an entry. Then you wait for the deeper pullback. Easy peasy lemon squeezy. It isn't more than it's going to hurt your FOMO. And that's the pain. That's where you need to work on. And that's okay. Play Tetris instead. All right. Do we all feel lifted up today? Do we all feel like we have done something great today? Do we all feel like we are ready for a pullback on gold? We are all waiting for if we can get it back to 24.15 or 20 for that matter, something like that. And then that's your day trade. Your weekly trade is more like 23.90, and your deeper is more like 2,300 or so. And everything is how it is supposed to be. I saw that people was asking for my link to my, my trades, how I trade, where I trade, to my FX book. I'm going to put that in my next video that I go live on YouTube. So I can see that the link has been pushed out. So I think that's going to be tomorrow. So you're going to see how horribly good or terribly well or whatever that is I trade them, and the trades I'm currently checking. Other than that, if you are ever interested in, and you should be interested in, I am in Discord. I do answer questions. If you have a trade plan, if you have something about trades, I'm here to answer in the A1 Discord. So other than that, hope you guys have a fantastic day, and boom, I'll see you soon.
Thanks again for watching today's show. Our goal at A1 Trading is to share free value to you, our audience, through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more, lest ye walk the plank. Join our crew as we head out to go long on gold. See you next time.